Alrighty, good morning, everyone. Good morning. Hope you guys are doing well. Hope you guys had a great weekend. Today is Monday, February the 2nd. It is a brand new month. Super excited. A bunch of news over the weekend here as well. As you can see, we end up dropping on the major indices. We're actually underneath our previous day lows, underneath our last week's lows. We had a pretty big drop on gold and silver. That was one of the main catalysts that we ended up moving towards the downside. A couple other names I'll kind of talk about here in a second. We still have a bunch of earnings this week. We have a bunch of red folder news this week here as well. Before we do that, what's up, everyone? Good morning. Good morning, Big Money, Hartik, ANL, Andreas, Victor, KO, Cody. Good morning, Big B Roots, Lamit, Chris, Sinna, Daniel. Good morning, TW. Good morning, Juan, Robert. Good morning, I am Sam, Frank, Hannah. Yeah, what's up, everyone? Good morning. Hope you guys are doing well. Hope you guys had a great weekend. Let's head on to the economic calendar, and then we'll head on to the earnings calendar here as well. So first things first. As you can see here for the economic calendar coming into this week, we have some red folder news on Monday. This is going to be at 10 a.m. Eastern Standard Time. We have some more red folder news here on Tuesday. We have the JOLTS opening. Wednesday, 8:15, ADP non-farm enrollment change along with the ISM services at 10 a.m. Eastern Standard Time. Thursday, we have some unemployment claims once again at 8:30. And then, of course, on Friday, this one's big here as well, unemployment rate plus the consumer sentiment, which is going to be at 10 a.m. So almost every single day, basically every single day this week, we do have some sort of red folder news event here in the markets. Now let's head on to the earnings calendar. So the earnings calendar this week is jam-packed. Last week we had a bunch of the Mag 7 reporting. We still have a couple names left here. So something to keep in mind, Palantir, let me see if I can zoom in. Palantir today after close. That's a pretty big one. We have some tomorrow, AMD. That's something to keep in mind for some of the semiconductors along with SMCI. On Wednesday, we have Uber in the morning, LLY, we have Google, we have ARM, we have Qualcomm. Those are a couple big ones on Wednesday. And then, of course, on Thursday, we have Amazon. Some of you guys are always talking about IREN, MSTR is pretty big. So we have a couple big ones, Reddit, AFRM. Yeah, we have some big ones on Thursday here as well. So as you can see, basically action-packed all week with, of course, from last week as well, right? We had some FOMC that was on Wednesday, and then we had a bunch of earnings on Wednesday and Thursday. So we're still basically having the aftermath of last week, plus, right, gold and silver, very volatile. So a lot of things to kind of talk about coming into this week. Markets are pulling back. VIX, of course, is spiking here. So we'll head on to the charts here in a second. How can I download this watch list? You can download this watch list. That one is, of course, in the description below. Also post it on my free community. I posted in my Telegram. So if you want to check out the earnings calendar or anything else, right, you even can find this online. If you search up on Twitter, you can search up economic calendar, and then you can also search up the earnings calendar online as well. Okay, let's head on to some charts and see exactly what we're looking at coming into today. Before I do that, let me grab some water and then we'll get started here. Okay, first things first, let's talk about the ES. So let's go into the hourly chart here for the ES, higher time frames. As you can see, we end up rejecting off our all-time highs. So for the ES, price came up and towards our all-time highs last week, and we end up having this nice rejection right off that level. Of course, we had some more news, right? We ended up having some earnings. We had FOMC. We had a pretty big drop towards the downside, and then we ended up retesting off our key levels for continuation lower. Now we're all the way back down in towards our last week's lows. So coming into this week. What we're going to keep an eye out on here is, of course, going to be that last week's lows, which in this case is your Thursday's lows. You can see nice push here in the overnight session, but currently we're reclaiming back above this level. And what we have established now is going to be that 69.90 along with that last week's low. So our Friday's highs along with our Thursday's lows. So in between these levels, we're going to have a lot of volatility, but in my opinion, there's not going to be a super clear direction here in the overall markets. On Friday, a little bit of a tougher session just because we had a big drop on Thursday. So coming into this week, if we do want to see any sort of long positions towards the upside, we're number one going to have to pay attention to our 69.90, also the Thursday's lows, which is going to be that 6900. You can see currently after that reclaim, we're seeing some nice buyers step in off this 6900. Longs, we could be looking for the bounce here off our 6900 coming into market open. Of course, other long positions are now going to be above our Friday's highs, which of course is at 69.90. Currently, we are able to open kind of back in between this range here. So now let's go back onto the lower time frame. So other levels I'm going to have marked out coming into today. I'm also going to mark out that previous day close level, which is essentially equilibrium. So I'm just going to mark out this general area here in price, where as you can see, it's basically equilibrium. Also your previous day close, which is your Friday's 69.60. So coming to market open here, if we do want to see some long positions or some long side here in the markets, maintain above our 6900. Another possible scenario now is going to be that reclaim back above that 69.60, which is that previous day close. If we do want to see some downside and a potential move lower, now what I'd like to see is really the break underneath our 6900, which in this case is that Thursday's lows for a push down in towards that pre-market lows. But as you can see, we're going to have to get underneath your key levels of support. Plus, we're going to have to break back underneath that Thursday's lows if we do want to see any sort of continuation. If we go into the SPY chart here, very similar game plan. As you can see, the key levels that we're going to have marked out is going to be that 694 Friday's highs along with our last week's lows. You can see multiple touches in the pre-market session here as well. If we do want to see some upside in the overall markets, we'd like to see the bounce play offer 686 for this continuation towards the upside. Another possible scenario here now is, of course, above our previous day close for a push higher, or if price had such a big move, right? This, in my opinion, won't set up today, but we could be looking for the break back above this 694 for this continuation back up and towards our all-time highs. So this is what I have for the SPY coming into market open. If we do want to see some downside, as I mentioned, it's going to be underneath our 686. This, of course, is your pre-market lows, and it's also your last week's lows here as well. Currently, we are about to open up in a very similar spot to where we opened up on Thursday. We're kind of in between this Friday's range, so you just want to be a little bit more cautious in between these key levels. You can keep an eye out on your 690 here as well. As for the NQ chart, this chart is the one to keep an eye out on just because it's showing a little bit more weakness. So if we go into the daily chart here, key levels that we have on the QQQ, you can see we kind of came up for the Qs, rejected off of our all-time highs, and now we're pulling back towards a key level. Currently for the NQ, you can see we're actually underneath our previous day lows. So as you can see, we're underneath our previous day lows. We're also underneath our last week's lows here as well. So coming to market open, we're going to keep an eye out on your 25,560 here for the NQ. So as you can see, multiple touches, right? Broke underneath this key level, ended up retesting it in the overnight session. Now we're actually right back at this retest level currently. So coming to market open, let's keep an eye out on your previous day lows. If you do want to see some downside, pop and fade for this continuation lower. For the NQ, this is going to be one of the main scenarios to keep an eye out on coming into today. If we do want to see any sort of mean reversion or a potential bounce play, the reclaim back above our previous day lows is going to be key. So this is what we have our 25,500 on the NQ. If you look at the QQQ, you can see how clear this chart is. If you go into the daily chart, you can see nice little rejection here off our all-time highs last week. Still technically bullish here on the daily time frame, but you can see building up these higher lows. We really need to see the hold of now. It's going to be this 620. So for the QQQ, if we go back onto the lower time frames here, you can see solid push down on Thursday after FOMC, after key earnings as well. On Friday, we end up rejecting off our 628, push down in towards that low that we created here on Thursday. Now you can see we're gapping underneath and underneath our previous day lows here as well. So what we like to see is a reaction that we have off our 619. If we reject offer 619, we can see this continuation down in towards that pre-market lows for this push lower towards the downside. If we reclaim back above that 619, we can see a little bit of a mean reversion back up in towards our 623 slash 624, and of course our higher time frame key level here is going to be that 628. So keep an eye out on your 619 coming into market open. We're going to maintain a bearish stance coming into today if we can maintain underneath that previous day lows. If we can reclaim back above, then we could be looking for a couple mean reversions here on some of the tech names as well. So this is what I have on the QQQ along with the SPY coming into market open. Now let's go on to the SMH. We'll head on to the IWM, and then we'll head on to some tech names here as well. If you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below as well. Yeah, if you guys do have any charts or any tickers, you guys can now drop them in the chat. Let's first talk about the SMH, which is the semiconductor ETF. As you can see, some of these are slowing down just a bit here. We had a couple nice earnings last week. We had SNDK, which was the main one, actually gave back most of its gains on day number 1. As for the overall semiconductor theme, we are slowing down just a little bit here. If we look at the weekly chart, you can see a couple upper wicks here now after having this super solid breakout to start off 2026. Now for the daily chart, pulling back in towards key levels here as well. So what I'd like to see moving forward, at least for the SMH, and if you do want to maintain a bullish stance on this ticker, on this overall markets, is the hold above our 396. So our 396 here, you can see this is the original breakout level that we ended up holding for this nice continuation higher. Now we're pulling back down in towards that 396 Friday, a little bit of a bigger drop here as well towards the downside. We also do have AMD. We have earnings tomorrow plus SMCI, which is going to be very key. So for the overall semiconductor theme, keep an eye out on your 396. This is our key level of support. If we do want to see any sort of continuation back towards the upside. So the key level here coming to market open, as I mentioned, is that 396. Another level that we're going to have to reclaim if you do want to see any sort of upside, of course, is going to be that previous day lows. So keep this in mind if you're looking at the overall semiconductors. If we do break underneath our 396 and hold underneath our 396, you can see a bigger push towards the downside. So key level 396, also mark out now it's going to be that previous day lows. So these are the two levels to keep an eye out on coming into market open here. Of course, if you're looking at the IWM, this one ultimately pulling back just a little bit here now as well, coming back into this higher time frame key level, which is also your retest. So for the IWM, super solid push towards the upside to start off 2026. A little bit of a pullback past few weeks. Now we'd like to see if buyers are going to step in. Now it's going to be off this retest level here on the higher time frame. So for the IWM, you can see we're now back in towards this retest level. We're seeing some buyers trying to step in here in the overnight session, but key levels today is going to, of course, be that previous day lows. We need to see buyers defend this 259. If we want to see any sort of continuation back towards the upside, if we do break underneath this level, we're going to see this push down in towards that pre-market lows here and below. So this is what I have coming into today here for the IWM. I'll check out gold and silver here in a bit. I'm first going to go over some of the tech names, and then I'll go over some of these high beta names, and then we'll check out gold and silver at the very end. So for Tesla coming into today, as you can see here on Tesla on the higher time frames, we recently had some earnings. and we're just basically still stuck inside of this range. So there's not really too much to say here on Tesla. We've had a decent amount of volatility to both sides, but ultimately we're now just kind of consolidating in this general area. If you're looking at this, right, earnings high, this is your 452. We have our earnings low marked out. We also have our earnings day low, which is also our last week's lows. So coming into Tesla, you can see a decent amount of volatility, no real clear direction here in the markets. Now we're gapping underneath now our previous day lows and also this key level here as well, which is that 424. So coming into market open here, what we will keep an eye out on here is that 424. If we can reclaim back above that 424, we can see this push back up and towards that previous day close, which is that 432. So this is the key level here on Tesla coming to market open, right above your pre-market high, above this 424. If we want to see some more downside, 424 rejections is in play for a push down in towards that 416 on the higher time frames. So this is something to keep in mind. Another possible scenario underneath that pre-market lows for this push down in towards that 416 here as well. So a couple scenarios on Tesla coming to market open. As I mentioned, we're open and playing both sides here. When the market has pulled back like the QQQ has last week, rejection off that all-time highs, we're going to be open to playing both sides on most of these names, along with the semiconductors, along with these tech names, just because there's no real clear direction on the higher time frames. The ones that do have clear directions like MU, SNDK, these ones are of course slowing down now as well. So we just want to be a little bit more cautious here in the overall markets. As for NVIDIA higher time frame still has not been able to break above our key levels, which is our 193. If we go back into the lower time frames here, 193 has been rejected. Now we're just kind of back inside of this general range here on NVIDIA. So our key level 193 towards the upside. Our key level of support here is that 186. So moving forward, key levels, we're going to mark out the top and bottom, plus we're going to mark out equilibrium, which is that 190. If we do want to see some upside here, reclaim back above our previous day lows for continuation higher. Another possible scenario now coming into market open is going to be the bounce play here off that 186 for that continuation back towards the upside. As for a few other scenarios that we have, potential pop and fade here off that 190, which is also the rejection here off that previous day lows, or now, of course, it's going to be underneath that 186 last week's lows for this continuation towards the downside. When we're trading inside of a range, we either want to be looking for that low risk entry, or we're going to be looking for the break outside the range. In this case, it's going to be that last week's lows for continuation lower. As for AMD, let's go into this one. Key levels that we have marked out coming into today. As I mentioned, we do have earnings on Tuesday after close. So this is something to keep in mind. And then Google and then Amazon on Thursday. So for AMD, this one's going to be fairly big. You're just going to be patient, wait for earnings on this ticker. But we recently just came off of our all-time highs, a little bit of rejection, and now we're pulling back into that retest level that we broke out from. So moving forward here on AMD, I would like to see the buyers step in. This is the retest level that we broke out from originally. So key levels coming into market open, it's going to be that 236. If we do want to see some upside, reclaim back above that 236 here is going to be key. Of course, the break back above right off the bat would be nice here as well. If the overall markets do want to stay heavy, I would be hands off on AMD on Monday and Tuesday, just because the IV is going to be elevated. Plus, we do have earnings. But for AMD, if it does want to stay heavy, of course, rejection here off this 236 for a push down in towards that pre-market lows. So for AMD, we'll keep an eye out on this one, of course, tomorrow, since we do have earnings. Besides that, let's go on to the next ticker. Next ticker here is Apple. This one recently had earnings, really just still inside of this consolidation. So not too much to talk about in between this 262 along with this 256. So we're just kind of stuck in between this range. You can see buyers are kind of stepping in, sellers are stepping off the top of the range. Key levels, of course, is going to be that 256.50. If you do want to see any sort of bounce play off this level for a pushback up and towards that 262. Of course, longs would be the best if we can break above and hold above this 262. As for shorts now, we can be looking for potential shorts underneath that 256 for a continuation lower, or that pop and fade off of that 262. So this is what we have for Apple. Not really too much to talk about this one, along with other names here as well, just because we are inside of consolidation. Let's now talk about Google. So Google does have earnings on Wednesday. Recently just came off of our all-time highs. Higher time frame still very much intact here as well. Every earnings has been fairly solid on this ticker. Last earnings, we end up having a nice gap up here as well. And now we're just continuing higher here on the daily chart. Higher lows have been built. So for Google moving forward, key levels that we're going to have marked out, of course, is going to be that all-time highs, which in this case is our last week's highs. So for Google moving forward, keep an eye out on your 242. And then we'll also keep an eye out on your 335 if we want to see some upside, right? Reclaim back above that 335 for continuation, or of course now above our 335 right off the bat for this continuation up in towards our previous day close, along with that previous day close 338. Downside here on Google is in play underneath that 335 for that push down in towards that previous day lows here and below. This one does have earnings, as I mentioned, on Thursday, and we're just kind of consolidating more than anything here on Google. So we'll most likely just wait for after earnings for a potential setup on this ticker. As for Microsoft, this one recently had earnings, nice drop towards the downside. Now we're actually staying heavy. So Microsoft, keep an eye out on your 440. We talked about this potential rejection. Nice rejection here on Friday for this continuation lower. Now the key levels moving forward, of course, is going to be that 440. Now along with our 422. If we do want to see some downside, we either can be looking for the drop right off the bat underneath that last week's lows for continuation. Another possible scenario is going to be the rejection really off our previous day close, pop and fade. We could be looking for this continuation down in towards that 422 here as well. Upside on Microsoft, the only play I like is really the bounce off our last week's lows for this potential kind of mean reversion back up and towards that 330. Besides that, you want to be a little bit more hands off here on Microsoft. As for Meta, super solid push towards the upside. We had some bullish earnings last week, end up filling the gap. So we actually have two gaps on Meta. We have this nice gap towards the upside, gap towards the downside. And now we have this gap back towards the upside. So we filled this one gap, and now we actually have a gap fill back towards the downside. So for Meta, moving forward, the key level that we have marked out, of course, is going to be that 716. So this is our previous day lows here as well. If we ultimately reject off this area, we can be looking for continuation towards the downside. So currently a little bit of reaction here off our pre-market highs. This is also our previous day lows here as well. So keep an eye out on Meta for potential mean reversion all the way back towards the downside. If we want to reject here off that 716, if we reclaim back above, then we could be looking for your 724 and potentially your previous day highs, which of course is going to be that 732. So keep this in mind here for Meta. As I mentioned, we're open and playing both sides. With the overall market dropping a little bit here in the overnight session, we want to keep an eye out on that previous day lows. As for Amazon, key levels that we have for Amazon, this one also does have earnings, of course, on Thursday after close. So that is something to keep in mind. But for Amazon, higher time frames, now we're just kind of consolidating. Higher time frame looks good, right? Higher lows have been built here on the daily chart. Now what we like to see is really the break above our 248 if we do want to see any sort of continuation higher. Last week, we did have a little bit of rejection here off this level. And now what I like to see is the reaction that we have off, of course, going to be that 243. Either that bounce play off your 243, or now it's going to be longs back above this key level. Most likely you just want to be a little bit more patient until after earnings, and we'll kind of talk about this a little bit more. And then of course for Netflix, this one hasn't done too much. Key level here is your 82.50. So really coming to market open here with the Qs underneath our previous day lows. This one is a little bit more weaker. The Mag 7 names to keep an eye out for coming into today. Tesla, of course, off our 425. As for NVIDIA, this one, we can keep an eye out on that 190, but key level really here is going to be that 186. AMD here, previous day lows, most likely will be a little bit more patient on this one just because we do have our previous day, we have earnings on Tuesday. Google has earnings, and then Amazon has earnings. So we'll take a look at really Tesla and Nvidia. We'll keep an eye out on that, plus the QQQ itself. Now let's go on to some high beta names here, and then we'll head on to gold and silver at the very end. But if you guys do have any charts or any tickers, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate it. If you guys drop a like, if you guys haven't joined the free daily watch list, that of course is in the description below as well. Okay. Let me look at some questions here as well. Not sure if you missed it, but you had a chance to repost a video about how to draw key levels. Yes, I have that in. I forgot to post that. I will. If you join the Telegram, or if you join the free daily watch list, I'll link to the basically Telegram, and I'll post that in there as well. Or I can also link it in the description below. Okay, let's go over some names as we kind of talk about things here. If the 1 minute failed before the 5 minute close, once the new 5 minute closes below, do we wait for a 1 minute retest, or we can enter on the 5 minute close / reclaim? I think you're talking about the 1 minute reclaim if the 5 minute candle hasn't closed. So the key level, if you're looking for the reclaims, right, you could be looking for a reclaim on the 1 minute time frame, but of course, if the higher time frame is showing, let's say the 5 minute has a big upper wick, now you're looking for the reclaim back on the 1 minute time frame. Number one, right, if you're looking for a reclaim on the 1 minute time frame, you either have to be very cautious because the 5 minute hasn't closed above. So that's something something to keep in mind, because the 1 minute could very much well fail and we could reject. If you wait for the 5 minute reclaim to be in play, sometimes the risk to reward isn't the greatest. So it's really more context based. It's hard to answer that question without any context and without the charts right in front. As for Palantir, the key levels that we have, as you can see, coming all the way back down in towards these key lows. You can see buyers stepping in, right? Solid push towards the downside. Now, if we want to see any sort of potential bounce here, you can see buyers are stepping in just a little bit. Key levels here now for Palantir is going to be that 148. 148 here is going to be key. Now you can see potential kind of reclaim. Buyers are actually stepping in here in the pre-market. We had some news here as well. So moving forward here on Palantir, bounce play off this 148 for this continuation back towards upside. Another possible scenario now is going to be longs above our previous day highs, 151. Let's go on to MU. MU now pulling back just a little bit. Key levels that we're going to have marked out is the area that we broke down from. So let's actually mark out this. Key levels moving forward here on MU is just going to be that 416. So on the higher time frames, we have multiple key levels, but really 416 and that 420 here, of course, is going to be key on MU. Other levels we can have marked out is really this 400 key psych as well. But moving forward, if we do want to see MU, you can see a little bit of a pullback on Friday, pushing this towards the downside. SNDK dropped here as well. We need to see the reclaim back above this 420 if you want to see any sort of push higher. But this one, momentum is starting to slow down, so I'd be very cautious now on MU if you're looking for that V-shaped bounce. Right, we had a couple V-shaped bounces earlier just because the higher time frame was still intact. If you do want to keep an eye on MU, key level is at 420, as I mentioned. If you do want to see the reclaim right back above this 420 for a potential push back up and towards that 436 here now as well. If we reject off this level, we can see a push down in towards that pre-market lows along with that 396. So this is something to keep in mind here on MU moving forward. Now let's go on to SNDK. SNDK, the key levels that we're going to have marked out, of course, is going to be that day that we had earnings plus essentially your previous day lows. Other levels that we can have marked out here now as well is going to be your earnings high that we created in the after hours, which is that 620. So coming to market open, you can see pretty big pop with earnings. We end up having that day one earnings reversal after rejecting off our pre-market highs. So for SNDK, Now moving forward, this is going to be day two earnings. There's not really going to be a clear trend just because day one, you had a pretty big rejection after this super push towards the upside. Now for day number two, we're going to have pretty tight consolidation. So for SNDK moving forward, pre-market highs, pre-market lows, you can be looking for the break above or pre-market highs for potential push up and towards our 620. Another possible scenario here now as well is going to be the bounce here off our previous day lows. You could be looking for longs off our our 570 or off our 540. I just want to be a little bit more cautious today just because we are consolidating after day two, right in between kind of its range that we had. So for shorts, potential kind of pop and fit, I would just be very cautious on SNDK now, right? Unless we can break back above key levels, you just want to be a little bit more cautious, wait for it to consolidate a little bit more, right? It is very much still bullish, but as you can see, this is your first technically sign of momentum slowing down here on the higher time frames after this initial push higher. This looks to me, right, the first day that is somewhat bearish and for somewhat the momentum to slow down here on the higher time frame. So just be a little bit more cautious here on SNDK. We'll kind of talk about that a little bit moving forward. As for Oracle, you have a couple nice pops here in the pre-market. This one ultimately filled its gap towards the downside, has been very bearish as of recent. Key levels that you'd like to see a reclaim now at a minimum is going to be back above our 172. That is the level that we broke down from. A nice pop here in the pre-market, but now it seems like if we just reject right off this level, we're going to come right back down in towards our previous day close. We have to see it maintain above our 172 or now above, of course, that previous day highs, 169 for any sort of pushback towards the upside. Okay, now let's go on to some other tech. There's really not too much that I see here with, of course, the overall semis pulling back, right? MU now pulling back a little bit here on the higher time frames, TSM pulling back, right? Even Intel's pulling back, SNDK slowing down here as well. So some of the semis, you just have to be a little bit more cautious this week as well. Yeah, we also do have multiple expirations. So last week we introduced something new in the markets. Before we only had Fridays expirations. Now most of these tech names we have Mondays, Wednesdays, and Fridays expirations. So that is something to keep in mind moving forward. So you just want to keep an eye out on the volume. And then, of course, if you are looking to play, right, 0 days, you just have to be a little bit more cautious. So we'll see where the volume's at on the options chain moving forward. That is, as I mentioned, something new on a bunch of the Meg 7 names. Now let's head on to, of course, gold and silver. So gold and silver, these are the names that have been most volatile as of recent. Key levels that we have on gold and silver. Let me actually just go back. Let me draw out some brand new levels. So for gold and silver, these ones are just pulling back into essentially the retest levels that we broke out from. So for gold, we end up having this nice retest off our key levels, nice continuation towards the upside. This was our previous retest key level here as well. And now you can see gold basically came right back down in towards that previous all-time highs. This is when we had that reclaim, and this is exactly where you can see some buyers are stepping in here as well, which is off that 4440s. So really nice bounce in the overnight session, nice bounce towards the upside. Now we're reclaiming back above our low that we created here on Friday. So moving forward, if we do want to see a potential mean reversion, this is actually the exact level. We like to see buyers step in here for this continuation back up and towards now. It's going to be that pre-market high here and above. So this is the exact level you like to see the buyers step in. If we ultimately break underneath, then we could see a potential kind of mean reversion back down in towards that 45, basically our 4560s here. So we really want to see kind of this potential inverse head and shoulders form above our 4680s here on gold. Now with the overall entire time frames flipping a little bit, I wouldn't be surprised if we break underneath, potentially reject off this level and continue back towards the downside here on gold. As for silver, this one's staying a little bit more heavy. Key levels that we have, similar thesis, right? This is that break and retest level, ultimately super solid push towards the upside. And then really within 1 to 2 sessions, all the way back down into the area that we broke out from. So you can see now these lower wicks, this is exactly where sellers are stepping in. This is our previous consolidation area. So moving forward, the key levels that we have marked out, at least on the higher time frames, right? If you want a little bit more precision here on silver, what you can have marked down now, of course, is going to be the low that we created. which I'm going to have marked out here, which is our 76. So moving forward, you can see nice kind of reclaim back above, a little bit of a push back towards the upside. Now moving forward, key levels that we're also going to have marked out here, as well as our close that we created here on, over the weekend. So we can mark out that previous day close. If we do want to see some upside, break above this 84 for this continuation back up and towards that key level and above. Another possible scenario, bounce play here off that 76 for this continuation towards the upside. Shorts are in play, of course, underneath that 84 pop and fade, or now it's going to be underneath that low that we created here on Friday for that continuation back towards the downside. So these are the key names that we're going to have the key levels that we're going to have moving forward. You're going to be open and playing both sides on really anything, right? Major indices, gold, silver, commodities, be open and playing both sides and just keep an eye out for the reaction off of key levels. If we are looking at the VIX here, you can see nice kind of spike back towards closer to 20. So a little bit more uncertainty here in the markets. So whenever the VIX is at 20, generally speaking, right, it is very good for day trades. That just means we're going to have no clear direction. Swings are going to be a little bit more difficult. And of course, longer terms are going to take a little bit of a hit here as well. So you just want to be a little bit more cautious if you are, right, swinging or long terms. As for day trades, right, there's not going to be a clear direction. So we're just going to keep an eye out on the reaction that we have off key levels. Most of the sectors, right, the main sector that has been leading the market higher is, right, the semiconductors as of recent, but now these ones are starting to pull back here as well. So you just want to be a little bit more cautious. And of course, a lot of these semiconductors, right, AMD is now pulling back, right, MU, even MU, SNDK, right, these ones, right, you just want to be a little bit more cautious. If you look at MU, this is technically our first pretty big daily chart that we've put in here on the higher time frame. So you just want to be a little bit more cautious here now. As long as you can maintain above key levels, right, we're still going to be looking for continuation higher. But of course, now with the SMH pulling back, we're just going to be looking for consolidation and looking for that next leg towards the upside. So now let's go on to my game plan for today, and then I am going to get ready for market open. How do you draw rectangle boxes like that on TradingView? This is a different, this is called Zoom In. This is like a Microsoft tool, Windows tool. Sorry, if you're gonna you can just draw on your screen. But coming into market open here for a Monday, we do have some red folder news at 10 a.m., which is ISM Manufacturings. So we'll see how that shapes up coming into today here for the markets. But really today, previous day lows here is going to be key. This is my main watch. If we can reclaim, we can see this mean reversion. Rejection, we can see this push down in towards that pre-market lows here and below on the Q. So keep that in mind. My main watch, we'll keep an eye out on Tesla 425 coming into market open. Similar game plan, reclaim back above. We can see this mean reversion. Rejection, we could potentially be looking for a push down in towards our last week's lows. So Tesla, one of my main watches today. Nvidia, keep an eye out on this one here as well. Previous day lows 190. As for everything else, a lot of these ones are consolidating a bit more. AMD, I'm not really interested in trading this one since it has earnings. Apple's consolidation. Google has earnings later into the week. Microsoft, key level here is going to be that 440. Meta, key level we'll keep an eye out on coming into this week here is going to be that 716. Potential earnings reversal on this play, all the way back towards the downside if we can reject. So keep an eye out on Meta, Nvidia, and Tesla. Amazon does have earnings later into the week, so I'm not going to look to trade this one. And then, of course, for the other names that we have here as well, really the main one is, of course, just going to be the SPY and Qs. I don't see too much that I like here, at least for momentum-wise on these high beta names, just because we're having pretty big pullbacks. Palantir, potentially something we can keep an eye out on, right? This bounce for this push back up and towards our 160 here off our key level support. So Palantir, something we can keep an eye out on coming into market open here today above our 148. Other levels we can have marked out that previous day highs here as well. So Palantir, potential break above our previous day highs for continuation or the bounce here off that 148. Palantir, no, it does have earnings today. Sorry. Palantir does have earnings in the after hours. So this one we will wait for tomorrow. This is going to be, we'll talk about this a little bit more tomorrow. But yeah, as you can see, a couple names with earnings, just be a little bit more cautious. Semis are pulling back here. as well. So really for this week, game plan is just to really take it day by day. We're going to keep an eye on the reaction that we have off key levels. As I mentioned, we don't want to have a bias moving forward, just because with the overall markets pulling back, we want to be open to playing both sides. Hood, this one pulling back down in towards key levels, breaking underneath key levels of support here as well. So Hood, SoFi, a lot of these ones in a very key inflection point, as you can see, right? Even Hood breaking underneath key levels now as well. This one has earnings coming up very soon, but really breaking underneath key levels of support, key level now all the way down in towards our 90. So yeah, for basically all these tickers, right, you can see a lot of these high beta names pulling back. The only things that are holding up, of course, is MU. Besides that, MU, SNDK, right, we'll keep an eye out on those ones. But really, besides that, not too much that I'm interested in today. We'll keep an eye out on the SPY and Qs as I mentioned. But yeah, besides that, Tesla, Nvidia, Meta, we'll be a little bit more patient. We'll see what shapes up, of course, with 10 a.m. And then we'll wait for any names that do have any sort of relative strength or any sort of relative weakness today. So with that being said, that's going to be it for me. I am going to get ready for market open here. If you guys did enjoy that, I appreciate it. If you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below. And yeah, with that being said, I will see you guys all tomorrow. All right, take care, everyone. Peace.